Hello, fellow traders. 'Tis I, the Rumpled One. It's Monday, September the 10th, the year 2018. Let's talk trading. System, method, strategy. I get asked the question all the time. What system's my favorite? Which one's the best? Which one do I use? What's that system called? What's that method? Um, the thing is, I don't know. Are any of you Bruce Lee fans by any chance? He had the what was it, the method of no method, the form of no form, something to that effect, because he transcended all of that. In other words, his technique is no technique, his technique is your technique. He adapted to the moment, and that's pretty much where I'm at now, meaning that when I look at a chart, I can look at a blank chart and my eyes automatically draw some of the lines. I'll look at a daily chart and notice, the high, low, top, bottom of the previous candle and look at where price is in relation to that. I look at an hourly chart. Is price in a wick zone of the previous candle? It's just things like that. Um, or if I put an indicator on, um, I just know, or using like my not an iPhone, but my cell phone. And when I bring up MT4 in the cell phone, it has some horizontal lines, but not necessarily where I would put, not like the sweet spot indicator, but just using those horizontal lines, I could say, oh, should I be going long? Should I be going short? Should I just be waiting, for the candle to close, and, it's a turn trade in progress off the bottom or off the top. So I can't really say other than, put horizontal lines on your chart and trade in the direction of the cross. Um, I mean, you can look at anybody else's strategy, and if you just put some horizontal lines on there, where they tell you to enter, one of the two things are going to happen. Either it's going to cross up and continue, or it's going to cross down and continue. So I don't care if you're using stochastics, the three level ZZ semaphore, some, higher math, butterflies, any of that stuff. Pattern recognition, candlestick reading, inside bars, doesn't matter. Just put some horizontal lines on the chart and take it from there. But there is one thing, no matter what system or method or strategy, you also have to have the money and risk management strategy, your own personal money and risk management system or method, where you determine the risk, which is the dollars or percent of your portfolio that you are willing to lose on your next trade, and the trade after that, and the trade after that. And using that, you will then either determine your position size because you know where to put the stop loss, or you determine where to put the stop loss because you've already figured out the position size that you want to trade. So we look at the monthly. Hey, we're still in the wick zone. Looks like it wants to leave the lower wick zone and go into the candle body. So maybe we go long there, or we can drop down. Okay, we've entered into the upper wick zone of the weekly candle. The week is up and all the gaps have filled, so there was a couple of nice gaps there yesterday. If you didn't take advantage of them, that's on you. Actually, it's the same day because it's still the first day of the week. So, but if you didn't take advantage of those gaps, that's on you. So right here, we're in the upper wick zone. So we're going to look to see for it to go out or out there. Now on the daily, once again, we're in the upper wick zone. Will it break or will it come the other way? You see here, it exited the lower wick zone, came back into the lower wick zone, then exited the lower wick zone. Money to be made. And you can see here, we've got some nice ranges 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 above 100. And we've got one above 200. And you can see here, dollar yen, an anemic 34, euro yen 120. Hence the switch to the euro yen. And you can see here, we had a nice short there. I don't remember if this one was on the chart last night when I made the video or not, but you can see here, we had a crossover of the weekly and daily open right there. First, the weekly open, hit the buy zone, hit the pivot, and more money to be made. Rat zone. Here we go. We've got a rat zone euro trade, euro yen trade coming up. Right there's the last chance to get in. And as you can see here, green, red at the top, turn trade. And you can see there's a few pips to be had. Then you had it again, few pips to be had. You had it again, and a few pips to be had. You had it here, and a few pips to be had. So just trading that, and remember, when you see it scrape those wicks and start exiting wick zones, you've got a little profit. Just go ahead, scratch the trade, take the 2 or 3 pips off the table. They all add up. And you can see here, once again, we took out the pivot here. We took out the weekly pivot here. And where was the monthly pivot? And the monthly pivot was here. So in one day, we took out 3 pivots. Remember yesterday we were down here, took out the pivot. We still have a missed pivot down here from last month, August the 22nd. Price action. Somebody was saying, what did I call this strategy? It's just price action. I mean, we're using here. Let me show you what indicators. I keep forgetting to do this. So the main indicator here is the 3 levels EZ and the sweet spots gold, both of which I modified extensively. And they're free to download. No charge, no donation required. My gift to you, fellow traders. Now, 3 ball at the bottom, green at the line, you go long. 2 ball at the top, red at the line, you go short. I mean, that's it. It's not much of a strategy or a method. It's just basically trading price action. I mean, that's all I call it, is just price action. I mean, I use my spread dots indicator to show me what's going on at the tick level so I can decide, okay, is this smart to take this trade? Here we are, Randy, real time. We're right here at that 90 line, and the candle is red, and we've got a lot of waiting going on here. So there's some indecision. So it's red at the line. You can take it. And you see this big candle here and this big candle here. I would look for price to at least get to this level and possibly to this level. Now, it might take it a while, but that's what I would look for. So doing Randy real time right there. See, we had a lot of indecision, and it finally broke through. And remember, price can't go up until the bid crosses the valley of the ask. And you will, let's see. And so in other words, this is what we're looking at. So price can't go up until it gets above this 90. It just won't. It can't. The bid has to go above the lowest ask. So you see here, this was the peak of the buys. The ask is below it. So we are in selling. And the and the bid is below the value of the ask. So this is selling right here. That's my definition, something I came up with. I mean, you can't read it in a textbook, but this is just from observation. And if you don't have this indicator, if you press F9, you will get this chart to pop up, and you will see here, you can just use your eyeballs. You can see here, price, this blue line has to get above this here for price to go up. Otherwise, it's not going up. And now it has to get above this line. And you see here, now back here there was a higher bid, so that's why we have selling right now. But the bid has to break this level for there to be buying, for price to go up. And so you can just sit and watch and sit and watch. Okay, where do we leave off here? Okay. Once again, horizontal lines. Is there a name for this method? No, I just put the previous lines for the previous, or the previous daily sessions lines out here. The high, the open, the mid, the close, and the low. Just trading with the H1 candle color at those lines. And this is just closed to the open for the weekly and the monthly. Here's closed open for the daily. So you can just get an idea, or you can look at the multimeter and you can see we're up for the week and the day. We're up for the month, and we're red on H4 and we were red on H1. Wick zone, price doesn't like staying in the wick zone. It jumped out, and here we are back again. So look for price to go above the 129 or come below the 128.70. And the holo, you see we had an opportunity right here to do a holo at 128.94. You'd be up a couple of pips right now. Inventory reduction bars. There was a long trigger here and a short trigger here. And the previous daily, weekly, monthly, open, high, low. See, we're just adding the weekly and the monthly high and low. And see, yesterday we were here. You see there was a break of the previous day and week low. Price started coming back. You should have either taken profit or scratched the trade. If you were using this indicator, it would have told you that there was buying going on. You could have locked in your profit. And right here again, you see here there was a long trigger, a little heat, and then there's opportunity to take profit. And once again, looking here, we're still doing selling, except now if we can get above this 128.896, we will have buying. But you see, it didn't make it. Now we just push back down lower. That's the power of the indicator. And you can see here on the Einstein lines, you can see all the selling that's been going on. It hasn't really pushed the price much, only 1.7 pips, but that's the selling that's been happening. So, fellow trader, system or method or strategy, that's what you have to determine for yourself. Or you could be like Bruce Lee and just trade in the moment. Have no strategy. Your strategy is no strategy. Your method is no method. Your system is no system. You just trade what you see. Because remember, it's not what you trade, it's how you trade it. So let's have a great week of draining the banks.